Well, good afternoon, ladies and gentlemen, and welcome to our latest People Hour session. Today we are focusing on the gender pay gap and the obligation to report and how your business can prepare. My name is Simon Horsfield. I'm a partner in the employment team. Delighted to have you all attending. I can see that we've got a good number, so it's obviously a popular topic. If you know any people or any of your colleagues couldn't join the live webinar, feel free to remind them that we do upload the session onto our website, so that will be available to access from the website over the next couple of days. Also, just in terms of housekeeping, you'll know from the dashboard that you've got the opportunity to raise questions during this webinar. I will keep my eye out, and if I see any questions, I'll pause the presentation and either deal with them at the time or suggest that we pick them up at the end. So let's make a start. In terms of our agenda for today, we're going to start by looking at why. Why is this such an issue? Why are we now thinking about reporting on the gender pay gap? We'll look at when these obligations come into force. You may have seen some comments in the press that this isn't really anything to worry about because the first obligation to report isn't until 2018, but don't be misled by that. As we'll see, the obligations become relevant very, very soon now. We'll look at what it is we're going to be reporting on, what constitutes pay, for example, and how do we calculate the pay gap. And then we'll look at how is it that we have to publish these reports. And we'll conclude by thinking about some next steps, some quick wins that we can take, and how we can potentially use these regulations to our advantage to be seen as an employer of choice within our particular sector. So just to take stock of where we're up to now, quick snapshot if you like. We have some draft regulations, the gender pay gap reporting information regulations, which were published alongside a consultation. The consultation opened on the 12th of February. It's now closed. It closed on the 11th of March this year. And the consultation asked a very simple question, which was essentially, what do you think of these regulations? Is there anything in there that you think needs to be changed? So we're not expecting from the tenor of the question that was asked as part of the consultation that any significant changes will be made between now and the final version of the regulations being made available. If you look at the government website now, they say they are currently considering the responses to the consultation. I understand that they did receive quite a few responses. And that the final version will be issued shortly, although if previous examples are anything to go by, that could be very, very close to the 1st of October implementation date. Agency workers regulations were published pretty much on the 30th of September, so it may well be that we don't get much notice of any changes that exist between the current draft and the final version, but we'll certainly keep you posted on that. As I say, the final version of the regulations will become law on the 1st of October, and they'll apply to you if you employ 250 or more people in the UK. Now, note that that's looked at on an employer-by-employer basis. So if you are part of a group of companies, and each company within the group issues employment contracts in its own name to its employees, then you don't aggregate across the group. You just look at it on the group employer by employer basis. So that might take some employers out of scope if they're within a group structure that way. Note also that it's only employees that we're talking about here. So not consultants, not agency workers, for example. And I've been speaking to a number of people who are structured as a limited liability partnership, for example. Members in the LLP won't typically constitute employees, and so they won't count for the aggregation purposes. But you do remember you do aggregate across different sites. So it's not like the collective redundancy legislation where you look at it on a site-by-site basis. It's done across all of the employers' sites on an employer-by-employer basis. So why are we bothered about this? I mean, interesting statistic there at the top of this slide: 38% of businesses don't currently analyse gender pay gaps, and I think it's that statistic more than anything that's driven the government to say we need to do something about this. We've had obviously the equal pay legislation in place for 40 years thereabouts now, and that's done its bit to tackle equal pay for equal work. But notwithstanding that, we've still got this pay gap between men and women looked at in the round working in the UK. I guess on the one hand, the good news is that the gap is narrowing. You can see there in 1997, the gap was as high as 27.5%, and it currently stands at just over 19%. So that's a move in the right direction, but the government thinks it's not far enough. And actually, just to illustrate that and to illustrate the unfairness of that pay gap, what that really means, if you think about it, is that for every pound that a man is earning, the typical man is earning, the typical woman will be earning 80 pence. So that really starkly illustrates to me the significance of the gender pay gap. Another statistic as well that brings it home: women retiring in 2015 will have to live on an income that's 25% less than men. And of course, the reason for that is because pension pots accrue based on percentage of earnings typically, and if men are earning more than women historically, then they will have accrued a more sizable pension pot. So you can see why the government thinks that something needs to be done, and essentially they had a choice. They could look at this as a voluntary measure, much like the women on boards. You remember we had the Lord Davies report on women on boards setting a target of 25%, and the government decided to do that on a voluntary basis with much success. I think the latest statistic is we're around about 27-28% women on boards in the UK. But with gender pay gap reporting, government decided that the voluntary approach wasn't going to cut it. Their intention, of course, is to capitalise on the talent and experience of women and ensure that UK PLC is taking full advantage of this. And I guess the social economic reasons behind that is it's good for the individual, good for the women in question. It's good for employers because they are making full use of the pool of talent and experience that is out there, and it's good for the economy. If women are being paid more, that will generate more in tax revenue. If businesses are more successful as a result, that'll create an economic boom. And that's the kind of, say, social economic background to this legislation. And the idea behind requiring employers to report on the pay gap is to encourage businesses to take steps to close the gap. Effectively, it's the sort of name and shame principle where transparency is seen to be the key. And as we'll come on to, employers are going to have to disclose this information, so there will be no hiding places. And I think what the government is really expecting is a race to the top as employers compete with one another to be the first to have closed that pay gap. Now, the reason that I believe this principle of closing the pay gap has been reduced into regulations which require reporting is actually because the reporting itself will allow for comparisons to be made and benchmarking to be done across similar organisations. But also, it will provide a standard method of calculating the gap. Because what we can't have is a situation where people are comparing apples with pears, obviously, in terms of what constitutes pay and how they manipulate that data to cast themselves in the best possible light. So if we're going to get meaningful comparisons and meaningful analysis, we have to have a standard approach to analysing the data. And as we'll see, that's exactly what these regulations provide for and leave very little in terms of wriggle room when reporting on the data. A good example of that would be looking at basic pay. So an employer may choose to simply report on basic pay, but that will only tell part of the story. It's statistically backed up that men currently tend to be more likely to be employed in a management role, and as members of management are more likely to receive bonuses. So if we don't factor bonus payments into the pay story, then we're only giving part of the story. And those statistics there demonstrate that. We've got 1 million female managers compared with 2 million male managers. And that's 7% of females and 13% of males. Excuse me, I've just seen that we've had our first question, so I'm going to pause and take a look at that. Okay, it's quite a long question. I'm going to read this out and see whether I can give the answer. It says on PLC that that's a resource that lawyers use, so this is obviously a lawyer's question, that Government Equalities Office has confirmed in February that the government's intention is for gender pay gap reporting requirements to apply to employees in the wider sense, i.e. workers, even though the draft regulations define a relevant employee as a person who ordinarily works in Great Britain and whose contract of employment is governed by UK legislation. Do you have any views on this? Well, thanks, Joe, for asking that question. I mean, it is absolutely right that the draft regulations are very, very clear on the definition of employee, and it's that narrow definition of someone working under a contract of employment. So I think in that sense we can see that a deliberate decision was made when these regulations were published. Now, whether that is something that's picked up in the consultation and the government listens to that and broadens it out remains to be seen. My own view is that I suspect that that will be unlikely simply because of the administrative burden that that will place on employers to factor in the wider group of workers, but that will just remain to be seen. My own personal preference would be that they limit it to just employees. Okay, returning to the presentation. So when do these regulations become law? Well, as we've said, 1st of October is the key date. The obligation, though, extends to reporting on pay data that falls in the pay period for the month of April 2017. So in some respects, you might think, well, we've got 12 months to think about this before we have to report on any of our data, and that's broadly speaking correct. You've then got a further 12 months to publish your first pay gap report, so that has to be published by the 30th of April 2018. But, and this is the really important part, that first pay report that relates to the pay period for the month of April 2017 must include data on bonuses that are paid during the period 1st of May 2016 to 30th of April 2017. And it's a point that's been overlooked in a lot of the commentary that I've seen on gender pay gap reporting. Effectively, that means that the obligations become live now, well, in the next couple of weeks, even though the regulations themselves aren't in force until the 1st of October 2016. So there will be a look back period once those regulations become effective. So we'll need to think, as we'll come on, we'll need to think about the strategy for bonus awards during that period, 1st of May through to 30th of April next year. Now, this is quite a busy slide, but in some respects this is perhaps one of the most important slides, because this sets out what you as employers will have to include when you are calculating someone's pay for that pay reference period in April. And the pay reference period is simply, if they're paid monthly, it's the month of April. If they're paid weekly, it's a week in that month of April 2017. So pay, unsurprisingly, includes basic pay. If someone has a period of paid leave during that pay period that you're reporting on, you will include any paid leave that they receive. If they're on maternity leave and receiving maternity pay, then you can include that. If they're on sick leave receiving sick pay, you would include that. Other things like area allowances, shift premium pay have to be included in the calculation, and bonus pay is included. Other pay, such as car allowances paid through the payroll, call and standby allowances, clothing allowances, first aider or fire warden allowances, also can be factored in and have to be factored in to the definition of someone's pay in that pay reference period. An immediate point to note is that, yet again, we have a different definition of what constitutes pay. So this is different from the definition of pay for the purposes of unlawful deduction from wages. It's different from the definition of pay for the purposes of holiday pay, and so on. So it's just another definition for us to get our heads around. We can see some of those differences when we look at what pay doesn't include, because, for example, it doesn't include overtime pay, which might surprise you. Unsurprisingly, I guess, it doesn't include expenses. You can't take credit for the value of any salary sacrifice scheme that you might have introduced, nor can you factor in the P11D value of any benefits in kind. You don't include redundancy pay or any arrears of pay that might be paid in that particular pay reference period, nor do you look at tax credits. So as you can see, and we'll come on to, it's going to be very, very important that you can readily access this information about pay. You can extract that from your HR system almost at the push of a button, because what we don't want to have is a situation where you have to engage additional resource at a key time to extrapolate information about basic pay from various the wider definition of pay from various spreadsheets and different parts of your HR system. Now, bonus pay. Remember, that has to be included in your report of pay that people receive. And bonus pay includes payments received and earned in relation to any kind of profit sharing arrangement, productivity bonuses, performance-related bonuses, other bonus or incentive pay, includes piecework, and it includes commissions. So pretty much every aspect of bonus pay is covered there. If you have a long-term incentive plan or scheme in place, and part of the bonus award is allocated, for example, to that long-term incentive plan, then that still counts as part of bonus pay. If you make an award of shares as part of your bonus payment, then the cash equivalent of those shares on the date of payment is the basis on which you determine the amount that constitutes bonus pay. Now, I think some of this is going to need fleshing out in more detail, particularly in terms of long-term incentive plans, deferral mechanisms that might be built into those plans that mean that they pay out over a 3-year period, and so on and so forth. I'm expecting that the guidance that's issued will offer some clarity on that, but it may well be that we need to wait for case law to come through the system, which is always an unsatisfactory place to be. The best I can say at the moment, and it's purely gut instinct because the draft regulations don't give us enough to go on, but I think we just have to put a value on the bonus at the time it's declared, even if there is a deferral mechanism built in. So we simply look at it at the point that bonus is declared, and that is the figure that's used for determining pay for that pay reference period. Now, in terms of what employers will have to publish, and this is where you have to go back to your probably primary school maths. So lawyers don't like doing maths, and I'm sure HR professionals don't like doing maths, but hey, we've got to do it because that's what the regulations require. So first thing is we need to know the difference between mean and median. So remember, mean is the average across all of the people in the particular group. The median is where you line everyone in the group up against the wall and you take the person in the middle. So you line them up in order of the amount that they get paid from the least to the most, and you take the person in the middle, the midpoint of the range. So you have to publish both the mean and the median, so both the average and the midpoint in the range. And the reason for that, of course, is because the average figure can be really distorted by what are known as statistical outliers. So the people who might get paid very, very big sums of money right at the top of the tree, or very low sums of money at the bottom, may well cause the average figure to be distorted. So we also report on the midpoint in the range, so you can see what's the typical mid-range person in this organisation being paid. Now remember that pay for these purposes includes bonus pay, so you will already have factored that into your mean and your median figure. But as you can see from the third point on the slide, you also report on bonus pay separately. So you report on the difference in the average, the mean bonus pay during that preceding 12-month period between male and female employees. And you also report on the proportion of male and female employees who received a bonus during that period. And I think the fact that not only reporting on the difference in the mean bonus, but also reporting on the proportion who have received that bonus, I think that makes it very difficult to hide behind the data, because the bonus figures might look broadly favourable, and you may be able to show there's little gap actually between the average that's paid to a man and a woman in bonus terms. But then when you look at how many males compared with how many females in your organisation have received a bonus, that might be a slightly more revealing statistic that shows that females aren't remunerated as well, particularly when you consider the statistics that we looked at earlier with the 1 million female managers compared with 2 million male managers. Now, as well as reporting all these things, you also have to look at pay quartile bands. And to do this, you'll look at the salary pay spread across your organisation, look at the lowest 25%, the next 25%, the third one, and then the top 25%. And you have to show within each of those quartiles how many males have you got and how many females have you got. So this will give a really interesting view of the way salaries are spread across the organisation and distributed between males and females. Now, when you are reporting in these differences in mean pay and median pay and bonus pay, the figure that you report is a percentage. So you express the difference or the gap as a percentage. So just to give an example of that, if you establish that the average mean pay for men in your organisation is £10 an hour, average mean pay for women is £8 per hour, then your gap, your gender pay gap, is 20%. And that's the figure that you'll report. And all I did to get that gap is £10 minus £8 is £2. I divided that by £10 and I times it by 100. That gets me my 20%. Now, the proportion of men and women who received a bonus is again expressed as a percentage. So if 10 men out of 100 men received a bonus, then it's 10%, and so on and so forth for women. Now, the point I've made there at the end of the slide is that the way you are obliged under the regulations to report on this pay data is a very blunt tool. As we said at the beginning, it leaves little room for manipulation, and it means, I guess on the plus side, it means we are comparing apples with apples, but on the negative side, if you've got a pay gap, it's going to be very, very difficult to hide it, given the nature of the obligations under these regulations. Another question, so I'm just going to pause the presentation and have a look at that question. So the question says, is the hourly pay rate calculated using contracted hours or hours worked plus holiday hours taken plus sickness hours? Now, in the example I gave, I probably oversimplified things, Aaron. I'm going to address this answer to you since you've asked the question. So I expressed the figure as an hourly rate, but when you look at the regulations, there's no requirement to express as an hourly rate. You simply take, it is the gross hourly rate of pay of all male relevant employees and the gross hourly rate of pay of all female employees. So on that, my view is that we have to look at the contracted hours, but again, it's silent in the regulations. So I suspect that that's something that's going to be clarified for us. It's used, gross hourly rate of pay, I'm just looking at this definition to see if this gives us any help. This is Regulation 4.2. Gross hourly rate of pay is determined using the weekly pay divided by weekly basic paid hours for each relevant employee. So, yes, it seems that we're looking at the intention, certainly on the current draft, is look at the basic paid hours, which I think, using the language in your question, is the contracted hours, which sounds right to me. So in terms of how we publish this data, so it has to be published on the organisation's website, along with a written statement confirming that the data is accurate, and that statement has to be signed by an appropriate person within the organisation. Interestingly, there's no prescribed format for that report, so employers can go freestyle in terms of their drafting as long as they include the relevant data and confirm that that data is accurate. And I think there's going to be a real art in the way that these reports are prepared, and we'll come on to that in a moment. Once the information has been published, it has to stay on the website for 3 years. And the intention behind that is it enables the public to see the steps that have been taken to close the gap, and I guess stops organisations as well manipulating the data on 1 year, or just taking advantage of a freakishly good year when the pay gap was very narrow. As well as this, we know that the data has to be uploaded onto a government site. We've no details of that site yet, it's just referred to obliquely in the regulations. And we understand that the data there will be analysed, and apparently the government intends to publish a list of the best and worst employers on a sector by sector basis. So I think it'll be the top 10 and the worst 10, or however the government chooses to categorise best and worst. But this is obviously of concern, or potential concern, to employers, because people may not stumble across the data on their website, but if you are one of those organisations that's in the bottom category and you are named and shamed on a separate website, then that is potentially very bad PR for your organisation. So what does all this mean? What should we as employment lawyers and HR professionals be doing now? Well, I've said now is the time for action, even though the first report isn't going to be published until April 2018. We still, I think, need to know what the pay gap looks like within a given organisation, and importantly, how it compares with others in your sector. See, it may be that you've got a 25% pay gap at the moment, which is worse than the national average of 19.1%. But actually within your sector, that might still be a relatively favourable position. So don't be necessarily alarmed by what your pay gap situation is at the moment. You need to put it into context by comparing it with others in the sector. So how do you go about finding out what the pay gap is at the moment? Well, if you don't already analyse the data, if you're one of the 38% that isn't doing, then we would certainly recommend a trial audit. And I've suggested there that you might want to think about instructing lawyers to help with this. The only reason I think you would do that is so that you could potentially take advantage of legal professional privilege, which would mean that the results of your audit don't have to be disclosed in connection with any legal proceedings. And I might be being a little bit paranoid here, but I guess what I'm thinking about here is, if I were advising an individual, for example, on an equal pay claim or an indirect sex discrimination claim or something like that, one of the things I may well ask as part of my specific disclosure requests would be to see the results of any trial gender pay gap audit that has been taken. So I guess those things would be disclosable if they were asked for, or if people got wind of the fact that they'd happened. And so you might just want to think about being able to take advantage of legal privilege. To say, very easy to do just by instructing lawyers to manage that process for you. The other thing that I think a trial audit will flush out is whether your current HR system is up to the job, because it may well be, when you look at the definition of pay, that you can't quickly identify the information that you need to be able to get hold of. So it may well be that your HR system needs upgrading sooner rather than later. I'm just going to pause here because we've had another question, so let's have a look at this question. Do I think information obtained from the process of preparing the EP report will put businesses on notice of EP issues and increase their risk in relation to subsequent EP litigation, such as that facing ASDA at present? Yeah, I think Carl, that is a very real risk. Of course, the issue that you are reporting on, and if you get the information under a trial audit, is different, because it's not looking at data on a job by job basis, but it may well demonstrate to the business that there is an issue, and it may well then beg the follow-on question, well, what have you done to resolve that issue? So I do think it's the kind of information that well-informed claimant solicitors will want to get hold of to try and use against the employer in connection with legal proceedings. Okay, moving on to more next steps. Bonus strategy for the period 1st of May 2016 to 30 April 2017 will need to be reviewed and decided upon quickly. The easiest way I would suggest to see whether there is going to be a potential issue is to look at the previous year's bonus data and see what that throws up in terms of average bonuses paid to men and women and the proportion of men and women within your business who received a bonus. And it may well be that that reveals that you need, if you want to be able to report on this, then you need a fairer distribution of bonuses. That then begs the question, how do you achieve that? And is it possible to do anything in this next 12-month period? And of course it may not be, depending on what your contracts say. So all those kind of questions will need to be looked at, and you'll need to come up with a strategy that works for your business, that addresses the issue to put as favourable an interpretation on the data as possible without demotivating and causing employees to be disaffected because they've not received, or a group of them haven't received the bonus award that they thought they were going to get. So once you've completed your trial audit, then it should be possible to run a comparison with others in your sector. It may well be that you've got networking groups that are prepared to share that information. That's probably unlikely. So if you're struggling to ascertain a benchmarking figure from within your sector, then I would suggest you engage a remuneration consultant to analyse the data for you and to run a report. Once you then know where you sit in your sector, you can design a strategy that works for your business. And I think the questions you need to be asking yourself are, where do you want to be in your sector? Do you want to be best in class? Or are you comfortable being somewhere in the middle, just keeping under the radar? And that's really only a question that the senior leadership team in the business can answer. And once you've come up with the answer, then you need a strategy to ensure that you either get to where you want to be or you stay where you currently are. Bearing in mind that other organisations are likely to be going through the same process. And of course, this is what the government wants. They want that race to the top. Now, in terms of designing a strategy, HR professionals will be more than capable of doing this kind of thing. Employment lawyers can certainly support in that. At gunnercooke, through our sister company gunnercooke Consulting, we've also got HR professionals amongst our consulting ranks who would be more than happy to work with clients to help them design that appropriate strategy. But remember, when you're thinking about strategy, I would suggest that this goes further than just pay. It's not going to be a quick fix, because really what I think the gender pay gap brings to light is the fact that actually this is all about career progression for women. It's not so much focusing on the fact that a female manager doesn't get paid as much as a male manager for doing the same job. It's actually highlighting the fact that something happens during the career of a woman that means for some reason she isn't earning as much money and doesn't have as much career potential as a man in that business. Professional service firms are well aware of this. It's well accepted, for example, within the legal sector, that on entry the percentage of men and women joining the profession are broadly similar, and in fact it's slightly skewed in favour of women, around about 55% to 45%. You then look down the line though and look at partners within law firms, and the typical law firm will have around about 20% of women compared to 80% of men who've made it to partner. So what's happening during that period of a woman's career to mean that she's not achieving partnership status? As I say, that's not a quick fix. That will require all sorts of things to be analysed. Is it actually linked to women going off on maternity leave, then returning and being overlooked for promotions, or actually choosing that they don't want promotions? All those kind of things will require a significant amount of analysis and consideration before you can come up with a strategy that's going to fit your business and actually achieve not just a narrowing of the pay gap, but actually a more equitable career path for men and women in your organisation. Having talked about equity, it seems a little bit churlish to move on to avoidance techniques, but people are considering whether there are ways that, certainly in the short term, if they've got a significant pay gap, they can manipulate the data to avoid having to report on that gap, or to avoid the data looking as bad as it might be in reality. So the first and fairly obvious point is that you could perhaps consider, if you're in that position, burying the data. Clearly you will have to report on the data that's required under the regulations, but given that there's no prescribed form for the report, I think if you've got bad news, then you could potentially add an awful lot of commentary to explain that data and put your own spin on it, and show why there are spikes that have caused the data to be somewhat distorted and unreliable. So as I say, that will be a real art, and I think that's where the external communications consultants will come into their own. I guess as part of your strategy that you implement on the back of your trial audit, you might think about whether remuneration needs to be restructured. For example, making more use of overtime, benefits in kind that are outside the scope of pay and so aren't factored into the data that you have to report on. And that, by putting more emphasis on those things in your remuneration structure, may remove the anomalies that might otherwise appear. Final point, subject to what we touched on earlier with the employment status and whether I'm right that it's limited just to employees when the final regs come in, then maybe thinking about employment status is a way to go, maybe using more agency workers, or indeed, as one of my clients doing, a professional services organisation, currently a limited company, thinking anyway about converting to an LLP. Might the gender pay gap reporting obligation just be another tick in the box of why it would be advantageous for that business to convert to LLP status, because then of course the senior employees as they are currently become members and are likely to be out of scope. So those are the kind of things I would suggest we could be thinking about from an avoidance perspective, but really I don't want that to be the message that we take away from today, because I think really the intention behind these regulations is good, and the focus, I believe, should be on what steps can we take to close this pay gap, not bury it. Now, as with all of these things, when there's a threat, you can, if you have the right mindset, turn it into an opportunity. And I would like to think that a number of the clients that are represented on this webinar would find themselves in a position where actually, when they do the analysis, they realise they're in a very strong position compared with others in their sector. So it may well be that actually running that trial audit now gives you an opportunity to steal a march on the competition, because you might choose on an entirely voluntary basis to get your data out there early, accompany that with an appropriate press release, have a big splash about just how much your organisation has done already to narrow the pay gap. Yeah, and you might want to celebrate successes internally as well if your data looks favourable, and start that process of engaging with employees and getting them bought into the fact that you are a good place to work, particularly compared with others in the sector. And ultimately, it seems to me this is really all about becoming an employer of choice. If you can be one of those fortunate few who are named independently on whatever government website it is as one of the top employers for narrowing the pay gap within your sector, then that immediately makes you the kind of organisation that people will want to go and work for, particularly, obviously, women. And I would suggest that actually challenging senior management within the business, challenging the board, that this needs to be taken seriously so that we can recruit and retain the best employees in the marketplace, has to be the best way of making an opportunity out of what would otherwise be a threat. Final slide, just thinking about what happens if we drop the ball. What if the data that we report on is found to be inaccurate, or what if we don't even make a report? I mean, really interestingly, even though these are government regulations, so mandatory in that sense, there aren't going to be any sanctions if the data is inaccurate or if you don't even make a report. What we do know is that the government's going to monitor compliance and review whether this sort of quotes voluntary approach is effective or not. So I suspect that 3 to 5 years' time we'll know whether more needs to be done. But my strong sense is that because of the adverse PR that's going to be associated with not reporting, I truly believe that that's going to be enough of an incentive for the majority of employers to make sure that they do report. And just as a final point, we've not talked about public sector at all as yet. All of this is aimed at private sector, and I know that the people attending this webinar are all private sector employers, but in case there's anyone listening to this afterwards on the website from the public sector, please note that you're in a different position, and reporting for the public sector employer will be mandatory, with sanctions and penalties if not complied with. So that brings us to the close of my presentation. There's a little bit of time left, so I'm happy to stay online just for a minute or two to see if we've got any further questions based on anything I've touched on. Failing that, I will simply close by reminding you to look out for the invitation to our next People Hour. I'm thinking of doing a special on Modern Slavery Act and what that means for the HR community, so look out for more details on that as well. And otherwise, I will close by thanking you for joining and wishing you all the best for the rest of today.